Um, Hi guys, good evening everyone. So I don't want this particular class to take so much of our time. Let me just do it sharp sharp. I think it will be so much better like that because be like we are a little bit kind of lagging behind, and to be couldn't do class this Saturday and today too because I'm not feeling too well. So that's why I just say let me do this and cross it over and maybe make the video available so that you guys can watch it. Okay, now as we are going into the second aspect of the forex market, here today we are looking at what is pip, concept of bid and ask price, that's concept of buy and sell price, what is a spread, forms of trading orders, concept of take profit and stop loss, leverage, lot size, risk management, common mistakes by traders, trading plan. And regardless, be like here, like this lot size, I made a mistake here. Like, pardon me, it's kind of a busy day, seriously. And I'm trying my best because I have to type a lot of things in here. And you know how stressful it can be because I want to be compiling whatever, like within a very short period of time. So as we dive into the introduction, it says, what is PIP? PIP is the bedrock of everything. I repeat, everything we are going to be doing in Forex will revolve around PIPs. And seriously, whatever in Forex, no matter what, you can never escape what we call PIPs in Forex. As of crypto, we call them points, and still in Forex too, we call them points because if you enter your MetaTrader app, you'll be counting points at times, not these pips. But at first, now let's look into this pip. If you miss the concept of pips here, believe me, your foundation is going to be shaky all through your forex journey. And that's the truth. If you don't know anything about pip, because pip is just like a cell in biology, because in biology, if you don't know anything about cell, koi kaman babun da ka sani ne kawai. That's the truth. And always pips is the fourth decimal. It starts, we start counting pips, sorry, from the fourth decimal point, because majorly you see in forex market it has I forgot, it has prices like this. You see it usually contain for the small places like this. So pips starts counting from this. Let me say this one, 4198. Yes, someone may ask me, what of this six? Yes, six, this 6 2 here, the one at the top like this is still called pip, but majorly people call it micro pip. But whatever, it counts, like let me say this six, whenever this six counts from 1 2 3 4 9, then this one will change like that, like that, like that, like that. So they do call these small ones, this superscript here, micro pips. But forget about micro pips, it's all pips, it's all the same thing. I think this is just an example, an explanation. It says from the Euro USD above, you start calculating the P from the four decimal digits, where there which is 8. And as we can see here, it is 8 here that it starts, the pips. If you go through this, and regardless, you must know how to calculate this pip if you want to know your profit and loss before you enter any other trade in forex market. And there are three different types of pip calculation we have in forex markets. There's currency pips calculation, and the currency pips calculation, it is divided into two, of which there are normal pips calculation and there's JPY pips calculation. And the third one that I said we got, it is gold pip calculation. Gold, we calculate it differently, unlike the way we calculate the JPY pips and the remaining currency pips. Because if you can see here, this one, it is four decimal points, four decimal points, four decimal points. And if you come to this USD JPY, you can see it is 162, then point two decimal point. it is not 4 decimal points, so it have a bit of difference. And if you look into something like this gold here, gold, it is not 4 decimal point, it have 4 digits of number, then 10 decimal points. So that's why it differs. And this is a calculation. I can say it's very simple. That's at first, if you want to learn. And let me just a little bit cross something like this. Okay, be like, we have a price that resembles something like this, or let me say a price of something like euro USD 1.15.9. If it says plus 5 pips, that's you want to enter a trade and your take profit should be at plus 5 6, then your next price should be, you'll be adding your 5 to this one I say. Let me say it is 30 pips, then you add your 30 pips to the decimal points at the end here, to the decimal digits at the end here. These two, you add this, you add a something like, let me say, that's this one, it's kind of a little bit of confusing. You add 91 and 30, of which it will give you 120, 121 if I'm not mistaken. So yet still, this 121, I can say, will not enter here, and it will be adding here 6, then 2, then 1. That's how it will be turning into. But this me just a little bit kind of confusing it, because I know that's why I'm doing something like this. But if you go through it, definitely you're going to understand it. This is just as simple as it could be. Then there are two types of pips calculation if it comes to this term here. So the actual calculation process here is it. This is it here. So let me say, it says like the example we said above, 191. What was the digit? Sorry. Okay, 1591. Okay, 1.1591. Then we add 5 pips there. Then here it should be something like 0.001. Then we did times the number of pips, 5. Then it will give us something like 0.001 is 0.0005. So that's what it will give us there. And then we'll be adding our 0.0001, sorry, 0.0005 to the actual number we have, that's the 1.1591, and it will give us 1.1596. That's it. And if it is 30 pips, then you do 0.0001, then you do it times 30, then it will give you something like 0.0030. Then you do plus, let me say, 1.1591. And what can it give? I don't have a calculator here. It will give you something around 1.1621. You see, like the way I already said earlier, because whenever I already know about the calculation, that's why whenever I just look at the digits, I already know what it is. Like plus so number of pips, I can just add it up in my head. So please do your best and put this into your score. It will help you a lot in terms of calculating your risks. Okay, and this is another example, just to be so clear. And then yeah, still, then this is the JPY pips calculation that I'm talking about. And unlike the very first type of pips calculation that we have, this JPY pips calculation, it is not 4 decimal points, it is just 2 decimal points. Instead of doing something like 0.0001, then we do 0 point, then you put your number of pips. That's how it is. It starts from 0 point. If it is 1 pip, then we say 0.01 times maybe 5 pips, then we say times 5 pips. And if it is 6 pips, we say 0.01 times 6 pips. Or like the first one, that it is 0.0001. one time is 5 pips, or time is 6 pips, or time is 30 pips. So that's for JPY. It is 2 decimal places. And for the normal currency, it is 4 decimal places. I believe you understand this simple something. And then for gold, it is just the first decimal point. And for gold, okay, let me tell you like a secret of gold pip calculation, because if you go through this, you definitely understand it. But a secret to gold pip calculation is whenever you calculate your pips, then you do plus 10. Simple. Apart from this, I don't know any other shortcut that I can tell you in terms of gold. Just simple plus 10 pips. Okay, this is it. Like 1 pip, 0.1 equal, that's on a normal norms. 1 pip, it is equals to 0.1. And sorry, it is not 0.1. It is 0.00001. That's 1 pip. And in gold, it is 0.1. And 10 pips mean what? It's kind of confusing if I keep following this one, because I already said that one at the beginning. So now, and I don't want this video to be long. That's why I'm a little bit of rushing seriously. And you can just maybe hear from my voice, like seriously, my voice is not so good, it's not so well, but I'm just trying my possible best. Then the concept of bid and ask price. This bid price is the buying price, while ask is the selling price. That's just a simple term of these things. So you may ask, why are there two prices beside each currency pair, or beside each quote that we have? These two prices, here they are. I already said this one in my first video. I don't know if you people can remember. I tried talking about something about bid and ask price. So the left hand side price is the bid price, while the right hand side is the ask price. So the left hand side is the buying price, while the left hand side is the selling price. So if to say now you're buying Aussie Canadian, so it will execute the trade with this selling price, because they are selling it for you. And if it is you are selling Aussie Canadian, then definitely it will execute the trade with this buying price, because you are selling it to them while they are buying it. And if it is you buying, then they will execute your trade with this selling price. That's because they are selling it to you while you're buying. So this is the concept of bid and ask price in simple terms. And if you need further much explanation, you find it here. It's very simple, and I try my possible best to bring a real life scenario example, maybe that you can understand here, with our normal usual local currency, just for you to understand much more clearly about the concept of bid and ask price. So the next thing we will be asking, what is spread? Spread is the difference between the bid and ask price. Okay, if we go back to this top here, sorry, you see here the bid price is 0.9814, while the ask price is 0.9815. There is difference of 1 pip in between them. That's if I'm using just the 4 decimal points, but if I'm using the 50 decimal point, it's more than that. But let me just use the 4 decimal point for clear references. So there's difference of 1 pip. That's difference of that little amount. It is called spread. And that's how the brokers, the banks, and the whatever are making their profits from. As simple as it is. Just like the way I already did this example for someone who can read. Okay, for the example I inserted above here, be like, let me say it again. You went to a bank with your local currency money and be like, I want to buy $100 from you people. They have the dollar, you have the naira. Then they will tell you, okay, you want to buy dollar, no problem. We will be selling you each dollar at the rate of 1,400 naira. And $100 will be around 140,000 naira. That's all in all, the sum of it. You gave them 140,000 naira, and you collected your $100. So 1 hour later, or maybe the next day later, then you come back. People, I don't want to use this $100 anymore again. So collect your $100 and give me back my money. What they will be like, they will start telling you, guy, we are buying each dollar at the rate of 1,350 naira, because usually the selling price and the buying price would always differ, because that difference is where they make their money from, and that's where the concept of the spreads comes in, because that difference between the selling price and the buying price, it is what we call spread. Very simple as it could be. So the spread between that 1,400 naira, their selling price, and their buying price 1,350 naira, it is 50 naira just. And the 50 naira, it is what we call spread. And that's how they do make their profits. Because usually, if you're going to a bank, maybe your local bank, either any of your nearest bank, definitely that's what you encounter there. And very sorry, I forgot. We earlier talked about that I will be trying my possible best to insert our local language, especially explain things in Hausa. Yau kan za ku mun haƙuri, please. So that if I'm using the English, I'll be much more faster than the Hausa. Gaskiya, I'm not so good with this Hausa. That's the plain truth. So I don't yi mun haƙuri ne, because I just want to rush this thing and finish. So the next thing, it is forms of trading. So those forms of trading orders. Let me not just say form of trading, because there is form of trading. That one is another different thing. So form of trading orders. The buying or the selling are all orders you executed. So there are three different types of orders. Which number one, it is instant market execution, stop orders, limit orders. Okay, this instant market execution, as a simple layman understanding, it is either buying or selling with the exact market price at that instance. If you tap on buy, it will be buying at that exact time that you tap on buy. That's this instant market order. If you tap on sell, it will be selling at that instance. That's instant market execution order. That's buying at the market price. While these stop orders, whenever you heard of traders, or maybe you sit down with a trader, or you have loss, or maybe take profits. So this stop loss or take profits are all stop. You are in a running trade, the trade is ongoing, and this is the amount of money you wanted to risk, maybe $10, $20. Then you insert your stop loss at that particular price where you can only risk $20, and maybe you want your take profit should be around $50. Then you insert your price at that you insert your take profit at that exact price where it could be $50. So the moment, whether you are online or offline, it doesn't matter. Whenever the market price reaches there, it will instantly execute your order and secure your profits, or maybe secure your loss. Very simple. That's how these stop orders work. And there's limit order. Limit order, it is some people who may say limit order, entering the market in a future price, but no, it's not like that. Limit order, as simple as it could be. Maybe you've done your analysis, and definitely you know you couldn't be available at a time. Maybe when that price will reach certain level where you want it to reach, you may not be available. So the only thing you can do, that's where you can set a limit order. Whenever these markets come to this so place, buy me this particular position, or maybe sell me this particular currency pair, or maybe buy me this token or sell me this token. That's limit order. And I believe I've a little bit of explain them. Okay, in your MT5, this is where you get it. You get the market execution, buy limit, sell limit. Okay, as you can see, this market execution, I already told you what is it. That's instant market execution, buying or selling at the exact market price. While this buy limit or sell limits, I already told you that you set a price. Maybe you have done your analysis, then you set a price. Whenever markets comes here, buy me. That's when you tap on these buy limits or sell limits. Whenever market reach this particular point, sell it. And this is buy stop, and this is sell stop. Like you already know, kind of from the names you get to relate to what they are. And don't bother all these things, you come and find out where they are, because there is the next slide, which is there is the next PDF, sorry, which is MetaTrader 5 interface. We will learn about your interface. Then number, oh sorry, not number, the next thing, it is called leverage. The concept of leverage is the ability to use something small to control something big. In the case of forex, using a smaller capital base is to control a larger size. If you read through these, you definitely understand something I'm talking about. That's the leverage. Leverage is just like multiplying your money for you, be like you're borrowing. And Islamically, this is something that people says is haram. But Allahu A'lam, I'm not very sure about this. Yes, and a lot of people say it's riba. Riba means interest. So there are a lot of concepts and a lot of talks about this particular leverage, I can say. But however it is, this is what leverage means. Just study about leverage. And if you're staying away from leverage, stay away from leverage. Just mind you that you must be having huge amount of money to trade forex. That's without leverage. So that's for you. I'm not here to preach any Islamic thing or whatever. I'm just bringing up the topic. Maybe it may be useful. Then the concept of take profit and stop loss. I already talked about take profit and stop loss. I don't have to keep on talking about it anymore again. Then another most important thing immediately after pips, I think it should be this lot size. The question a lot of people have been asking: how much do I use to start forex trading, or how much do I use to make a daily target? This question here, how much do I use to make daily target? Please always cross it over. Forget about it. Stop thinking about it. There's nothing like that in forex trading. Okay. But something like how much do I need or use to start forex trading, it's kind of a questionable something. As a beginner, you can start with whatever amount, but precisely I advise something like 50 to 100, so that you lose them wisely. Maybe you learn something from there, and whatever it could be like immediately after these classes, I'll try my possible best to create us a challenge. Though I'm already in a challenge these days, I'm trying to turn $100 into 1,000. I don't know how long will it take me, but I want us to do something like that. And if you don't understand this concept of lot size, definitely seriously, let me know life for you. You a lot more mess up there, and this is something, it will be heart touching and not very sweet to hear. Okay, it says lot size is the amount or quantity of a trade that a trader buys or sells. It's sometimes called your position size or trade size. There are three different types of lot sizes. That's majorly, but otherwise sometimes there are four. But not every broker will give you the fourth one. But broker like Derivs can give you the fourth types of lot size I'm talking about. Number one, it is standard lot size. Number two, mini lot size, macro lot size. Number three, and the fourth one that I said, and I not insert it here, it is nano lot size. Okay, the way it is usually written whenever you enter into a trade, here is this is how you see it, something like this: 1 or 1.0. And mini lot size, it is either 1 0.1, 0.2, that's 2 mini lot size, 0.3, that's 3 mini lot size, 0.5, that's 5 mini lot size, like that. And then micro lot size, it is written as 0.01, that's 0.02, 2 mini lot size, 2 micro lot size, that's 0.05, 5 micro lot size, like that, up to 0.09, that's 9 micro lot size. And this is what they means. Standard lots contains 100,000 units of what you are buying, while mini lot size contains 10,000 units of what you're buying. Then micro lot size means 1,000 units of what you're buying. Okay, for instance, let me give you an example of okay, let me say we have Mr. A, Mr. B, and Mr. C. That's Mr. A use his huge amount of money to buy 100,000 carton of biscuits. Then Mr. B use his little amount of money to buy 10,000 carton of biscuits. And then Mr. C use his very little amount to buy just 1,000 carton of biscuits. So they bought all those biscuits at the same price, and they went to the same market and sold all of their biscuits at the same price either. So at the end of the day, who will be having so much profit? I believe it is Mr. A, because Mr. A bought 100,000 carton of biscuits. So he will be having the bigger profits. And if losses come his way, he will be having the much losses. And regardless, Mr. B will be having much more profits than Mr. C that bought 1,000 carton of biscuits, while Mr. B have 10,000 cartons, or I can say sold 10,000 carton of biscuits. So, and if losses comes, the losses of Mr. B with 10,000 carton of biscuits will be higher than Mr. C with 1,000 carton of biscuits. So that's how lot size works in Forex. It's just like the size you're using. Till today, let me not lie for you, I do use something like 0.02 lot size most of my trades, because I'm majorly a swing trader, but now I'm trying to turn myself into a day trader too, so that I shouldn't be sleeping overnight with positions. Okay, and this is another very good thing that you have to know. In each standard lot size, one pip represents $10, and in each mini lot size, one pip represents $1, and in micro pip, one pip, in micro lot size, one pip represents $0.1. If to say, let me say, we are entering into a trade, me and Mr. B, me and Mr. A. So me as Mr. AMZ is entering a trade, and I shared that same signal with let me say Mr. A. Then I enter into that trade with one standard lot size, and I say let's target something like 10 pips, just 10 pips. So, and Mr. A uses his own mini lot size to enter that trade, and we are all targeting 10 pips. At the end of the day, with that 10 pips, we got 10 pips. Due to the size I use, I'm getting 10 times $100. 10 times, sorry, 10 times 10 pips. That's each one pip is $10. So 10 times 10, it is $100. While Mr. A will be getting 1 times 10 pips. That's he'll be ending up with $10, while I end up with $100. And if there is something like Mr. B that uses micro pips here, so definitely Mr. B will be ending with something like zero point 0.1 times 10, which will be $1. So, and if to say, let me say, he used something like two mini lot sizes, that's zero point 0.2, not zero point 0.1 anymore. So then he will be ending up not with $10, he will be ending up with $20. And if to say I use two standard lot size to enter my trade, then I will not be ending up with $100, I will be ending up with $200. That's simple how it is in Forex, all about lot sizes. So it says, where do I set my lot size on the MT4 or MT5 app? Open your MT5, press and hold on a currency pair you want to trade. Click on new order from the pop-up menu, but majorly now on the MT5. I don't know whether it is only on the iOS devices, but I'll try my possible best and check the Android too, whether the option there shouldn't be something like new order, it should be trade, just trade. So you tap on trade and it will take you to an interface where, okay, I think on the Android phone it is new order. Yes, I'm just seeing it now because use on iOS. Wow, that's so nice. So while on the iOS devices, it's straight. The option there, it is straight, not new order. Take note, please. And then another thing, it is trading plan. In trading, in everything we do in life, you need to plan. There is a saying that when one fails to plan, you are planning to fail. Yeah, and this is so very serious in trading, seriously. But we will definitely talk about this uh trading plan, especially when already start trading. This is just an explanation about the trading plan you're supposed to be having. And it will be an essential something having a trading plan, but this is another something on its own, definitely. So I will definitely be drafting maybe even notes with an explanation, a little bit of 1 or 2 pages about that trading plan, so that you should know what kind of a trading plan you should be having. That's if you're trading on your own. And if we are trading together, then maybe we are all using my own plan. Okay. Then common beginner mistakes. I don't have to read all of this, but usually common beginner mistakes, it is not setting stop loss. I already have videos something on my social medias about this. Not setting stop loss, greed, fear, FOMO. FOMO means fear of missing out. Then phobia, phobia means fear of being involved. That these are the common beginner mistakes. Regardless here, an explanation about opening lot of positions is another problem that beginners encounter. Don't go and open position GBP USD, Euro USD, USD GBP, like lot of positions on different currency pair. You easily blow your account. That's a shoot. Because here on my swing trade account, I am trading like with only $83 in my account, but I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different positions because I already know my way. That's why I'm doing that. But as a beginner, seriously, I kind of do not advertise something like this. And with these 11 positions that I'm having, like I'm already up $140 in profits. And that's a swing trade. So, and the next thing, it is risk management. This risk management, just read a little bit of it. It's nothing. It's just like knowing what to risk and not what to risk on your account, because you don't have to be risking so much in your account. If you risk so much, you lose so much. If you risk all of it, you lose all of it. That's one funny thing about trading. So trade carefully and be safe out there always. And I guess then we go to the next thing, which we will be looking into the interface of that MT5, to be precise, because I doubt if I can be doing that of MT4, because I always prefer advising whoever to trade with MT5. MT4 is kind of a younger brother to MT5. Then why going for the younger brother while we have a free access to the elder brother? So see you in the next class. I'll be dropping this PDF together with the video, like the one I did earlier, so that you guys can come and encounter it here. So see you next. And I want to create maybe a Q&A session. I don't know when will it be, and I don't know on what platform should it be, maybe on WhatsApp or maybe here on this platform here. I don't know, but definitely we'll figure it out, or maybe we talk about this. So at least am I saying, or at most, but whatever, just that I'll be seeing you in the next class. And thank you for watching my video.